Now, the Central Bank of Nigeria has raised its benchmark interest rate. It's known as the monetary policy rate to 22.75%, and it's for the first time in 8 months. The cash reserve requirement was also increased to 45%. Correspondent Ademola Lawrence reports.
CBN will chair the Monetary Policy Committee meeting for the first time since he assumed office in September. According to CBN data, this is the highest MPC rate ever and is aimed at mopping up excess naira liquidity. According to CBN data, this is the highest MPC rate ever and is aimed at mopping up excess naira liquidity. Olayemi Kadoso, governor of the CBN, will chair the Monetary Policy Committee meeting for the first time since he assumed office in September 2023. The governor of the central bank talked about a clampdown on crypto exchange, including Binance. He said over $26 billion has passed through Binance Nigeria in the last 4 years.
In the case of Binance, in the last 1 year alone, $26 billion has passed through Binance Nigeria from sources and users who we cannot adequately identify.
The governor says the CBN will ensure that the economy is highly liquid and money will only get to genuine players in the economy.
The committee decided to further tighten monetary policy as follows. 1, raise the MPR by 400 basis points to 22.75 from 18.75%. As the central bank is concerned, we are moving to a very aggressive regulatory environment. We are moving to a very aggressive regulatory environment where those policies have been coming out, as you can see, and tolerance for people not to abide by the regulations that are coming out and to comply is zero. People will have to abide by those regulations, and those that do not will face the consequences for not doing so.
Mr. Cardoso also revealed that $400 million was paid to settle some outstanding foreign exchange commitments.
About $400 million that have to those that have been so identified. And we are committed to continue to do so in one form or the other to those that are genuinely identified and proven cases.
Mr. Cardoso says for the CBN, collaborating with the EFCC is very important, and they are also determined to do everything in their power to stop manipulation in the market. Ademola Lawrence, TVC News, Abuja.
Joining us now in the studio is the CEO, Finance with Mukhtar Mohammed. It's good to see you again.
Thank you.
And here we are. But last time you were here, it was before the MPC meeting. And now, Olayemi Kadoso has had his first, MPC meeting, so to speak. But with this increment of the MPR rate to 22.75, and listening to him defending the position, how much thought do you, or what sense are you getting really?
Well, thank God this time the MPC meeting was held for the first time in almost 8 months. And again, thank God that it was not a circular, a memo that was sent to us to know what the MPC rate is, because somebody say every week now you expect one circular or one memo from CBN. It's now become circular Bank of Nigeria. So that was an enlightening. I think when you look at the MPC meeting, I keep saying it, copy and paste will not help us. We keep copying, pasting, because once the global CBN, global banks, most of the banks all over the world, the central banks all over the world, the only way they can tame inflation is hike rates. But they also look at the peculiarity of their own environment. I give you an example. We started hiking rate like 18 months ago, almost the same time with the US. US has a height at that time of about inflation of about, 11%, between 11.5, 11%. Today, US inflation has come down to about 3.1%. The same thing with the UK. UK was doing about 12%. Today, they are low at about maybe 4-point-something% by hiking rate, then doing what we are doing now. And we started almost the same time, but ours has been different. At the time we started hiking rate, our interest was at about 16%. Today, despite all the hike, we are doing about almost 30% in inflation and pressure. So I don't think that is the solution to our problem. I think that is just, we are not treating the main fundamentals of the problem. The main fundamentals of the problem is, number one, there's a distortion, which the CBN governor have alluded to. But the distortion is not even in the supply chain. It's not even in the, you could say, market. Distortion in terms of market has to do with cost of production, because high energy costs, high transportation due to high energy costs, demand and supply not being met. Yeah, you could look at that. But when you look at this distortion that have been the major challenge of why we are where we are today, it's FX. We are not able to manage it well. And so FX contribute over 50 to 60% of our inflationary pressure. So what it means is that if you are able to address the FX solution problem, then you have reduced inflation by almost 60%.
How do we address the FX solution now?
I think for once, there seems to, I say it seems to be getting it, but we have to wait and see. Because if you looked at last week, at this time, there was panic. People were even saying that the exchange rate might get to 5,000. Or people were saying, 2,500 with the shortest possible time. And today, but it's only laughable that today the parallel market is lower than the official market. While the parallel market is doing, I think you're selling for 1,450, you're buying for 1,500. And the official market is doing 1,601. So that's supposed to be where you should have more liquidity. So the challenge is FX is all about liquidity. I think what I've seen about the CBN or this administration is, you say something, you said, okay, we have now we're going to give FX to 1,300 and something 76 bureau de change. Then you now said, you made that statement. Then before you now say, how are we going to go about it? Why can't you know how to go about it? Make a statement, hit the ground running. If you are selling FX to them, if they've gotten that supply at 1,300 that you said, and they have to do only a gain of 1%. Today, I expect that there will be panic with the speculators. You know, I said in your program the last time I came, I said, speculators are part of the market. There's no way you can drive them away. It's just like the trader. They're speculators, they are investors, they are traders. So you cannot drive them away from a market. But what you do is that you come up with better policy. The policy they've come out with now is, when you come up to deal with speculators, you have to come up with a policy that will send fear. And once you send that fear to speculator, the speculator now greed comes in. The greed will come in the sense that, these people are trying to send fear to us, but they don't have the liquidity. So I'm going to stand my ground. The other one will say, wow, when these people come in now, I'm going to lose my money. So he would bring it all out for the market, and it will bring it at a very low rate. So yes, what I'm saying is that the supply side that we've always complained about now seems to be the side that will be met if this policy sees the light of the day. I keep saying see the light of the day, because I've not seen any change that is not telling us that we have finally received FX from the CBN after making our payment. That's why I say, if this policy sees the light of the day. But if it doesn't, right, that means the speculators will strive again.
Earlier you said that what we are seeing, this rising inflation, is forex induced, and some other experts also seem to share that view, saying that it's a peculiar kind of inflation that Nigeria is experiencing, which cannot be solved by raising the MPR. Is that basically what you're saying too?
Yes, because when you look at raising the MPR, you need to look at struggling businesses. Businesses are struggling. Not only struggling in the area of sale, they are struggling in the area of profit margin because sales is not even there. And when you have to make sales, that means you need to bring down your profit margin. And some of them, thinking of expansion, have gotten loans from banks to grow their businesses. So what it means is
they have to pay that.
They have to pay that loan by the minimum they could pay the loan. They collect about the minimum rate is about 22% that the MPR raised. And as it stands, by the time you put other charges, other management, other this, and some banks will still want to make profit out of it. So before you know, you are paying almost 30 to 35% for interest rate on a facility.
And if we get to the point of a loan default, which is that
inevitable?
inevitable?
That is inevitable because what we are going to see now, we may now begin to see non-performing loans appearing on the banking side, a financial institution. And you don't want your financial institution to be in a risk at a moment like this, whereby your economy is very fragile. Now, the other thing you need to look at as a central bank, you don't come out to let people know like if your banking sector, your financial sector has not been regulated, making feel that everything was what was going on before. Because the CBN government say, oh, we are going to regulate the bank, we are going to have tough measures on the banks. And so that also will create fear. And you could see that fear play out in the financial market, in the equity market, in the banking stocks yesterday. Because of one, yes, when interest rate goes up, investors seem to take their money out of the equity market to the fixed income space because that means treasury yield are going to go up, fine. But when that decision was made, they didn't suffer so much. But when you know, as investors, first of all, you react to the interest rate hike. Then secondly, you now look at the pronouncement, how it comes. Then they begin to look at the sectors that will be affected by this interest rate. Now, the banking sectors could be affected in terms of if you are listed in, if you are a player in the investor in the equity market. But again, that speech by the CBN governor also is one message investors want to look at, and you could see that play out in the equity market. So when we are trying to deal with a problem, we want to make sure that we are partnered together with those that are the center of the solution to the problem. Not making the whole world see them as the main problem, and you, the regulator, don't have a problem.
But it surely will not. It's not all gloom and gloom, especially with the increase in the MPR. Is there no benefit to this?
I don't know how beneficial it could be. If a beneficial has to do with the regulators at the CBN, because you are saying, okay, we are trying to fight inflation. We are going to have low circulation of most people will not want to take loans again. And so when you hike MPC, you don't have idle money because a lot of money is now interest rate on investment, especially fixed income space. You want to make sure that your money are used on investment, and that means that they will be tied down for a long time. That will reduce liquidity in the system. That is fantastic. But look at it this way. The CBN MPC rate was high. Cash reserve ratio was high. So what we have seen there, the cash reserve ratio is the liquidity that the bank has to have.
Yeah,
that was high to about 45%.
45.
From 35%. Which to me, that's another good tool to control liquidity flow.
That's good.
That's a tool because you're trying to say, okay, you don't want so much money in circulation. But again, when you look at what I keep saying, copy and paste. In developed economy, when this happens, what you see is that a lot of people that are earning money now begin to fix their money either in financial instrument to have more income. But in us now, why I say we don't look at the precarity, how many Nigerians are able to feed? After feeding now, you now say, okay, I want to invest. The earning capability of the average Nigerian is low. So survival in a very high inflationary environment. And now this high inflationary environment is not as a result of maybe we say inflation is driven by something that is not general. Let me use that word. I'm trying to pick a particular item, but I can. Something that is not general. But inflation today is driven by something that is very general. Food. Food inflation is the highest, about 32%. That is very high. So, and then you look at energy costs. So all these tools, with all this high inflation tools in food inflation, whereby households have already reduced their food intake. So you are now saying how much of that would then now use to invest to bring down these challenges that you are trying to. So that's why we're saying that no, we should stop doing copy and paste. We should look at the peculiarity of our environment and begin to act based on our own peculiarity.
And the presidency also, said something, interesting that kind of trended. Was it last week or earlier on in the week? Talking about urging the CBN to be wary of political implications of its policies. Tunde Rahman was saying something about that. But from your own, oversight, somewhat, do you see any kind of spillover in terms of political implications of this? How is the Tinubu presidency looking?
You see, in developed economies, the physical, the monetary policy and the physical side tend to complement each other. Now, let me give you an answer. If the monetary policy have high interest rate, which means cost of borrowing has gone high, that in turn that means cost of business have gone high, that means that goes to the cost of goods and services will go high. Now, what do the physical side do to make sure that the impact of this is not felt? They come out with palliative measures, either in the area of, intervening in key sectors. Okay. Like if you talk about food now, if food is a large driver of interest rate, and the government have said that we are going to release grain. You see that what I said? They just said it. We've still not seen it. Mm-hmm. Because they say it first before they begin to think of how to go about it. Mm. They've said it. It's almost getting to a month now. We've not seen that. So if the interest rate have been high and food inflation is large about, what will now happen? Immediately you have said that. Immediately CBN said we have high interest rate. We are trying to deal with inflation. What do the government do? We have food. Okay. And you've promised the people. So that will dazzle this.
Just roll out the food.
Roll out the food. And then that means you bring down and you roll it out at a cost that is low. And so that you have brought down that inflationary pressure. Mm-hmm. But look at it this way. What we see is that the physical side, I'm not surprised when the student man say what they say, because if you look at, I mean a policy, the FX policy, circular. The CBN came on the circular and say 50%, especially to oil majors, that you can only repatriate 50% of your fund outside the shore of this country. 50% of that fund must be kept in here for 90 days. The president goes out as the #1 marketing officer of Nigeria, and he says, you know what? Investors come. Whatever amount you make legitimately, you'll be allowed to repatriate it. So there still to be this justice. So I'm not surprised with the presidency coming out with that. But the only surprise is this is the first president that have a special advisor on monetary policies. Mm. I thought there should be a synergy with the CBN. Even if you say monetary policy is an independent way of the CBN. I can tell you, America, there was a time that Donald Trump then, as president, felt that the Bank of America, the Central Bank of America was hiking rate, mm-hmm. and he felt that rate should come down. But the bank keep doing what they were doing. So it's sometimes independent, but then, like I said, you have to have that synergy so that we don't go on parallel. So that I heard him say that about 10 trillion on intervention were lost, especially during the Emefiele era, which, if you could remember, said it time and time, it was in the business of CBN to begin to do direct intervention the way they went about it. Okay. About 10 trillion was lost. So they are now saying, okay, we want to focus on our key areas. And so I think in terms of focusing on their key area, they are doing very, very well. But again, what has caused inflation pressure that we've had now is those 10 trillion naira intervention, in the past, which has not created any sustainable results. And I say it, and the suspension of the BDC for 3 months without creating an alternative market for those people that normally patronize the BDCs. And when you decide to create...
the banks cannot handle them.
It's not because the bank cannot handle them, because the bank also are culpable in terms of when it comes to FX. The banks are not as transparent. They've not been so transparent. That's so CBN was weary of that. But again, the CBN came out with a portal. You need to apply if you want PTA there. The CBN will have to vet it. And that's technology. That work. So why are we not thinking of improving it? So what you send a signal to the international committee, international investors to say, we could come out with this policy and this policy will be on for 3 years and something else will come up and we can change the policy and go back to the previous policy, forgetting that a lot of people also must have invested their fund on that policy and they've not started even making profit on it. Because a normal cycle of a business to begin to make profit is 5 years. And you're taking this license for them in 3 years. Some people must have been doing investment on how to build a bureau de change. Now, and again, if you look at the BDC, you come in with a circular, it's told us that now you are going to have tier 1 BDCs and 2 billion, and that's the capital base, tier 2, 500 million. Now, the over 1,300 and something BDCs that you are now giving FX, how many of them are you did you really study their capital base? Is it just a circular that has not come to implementation? So sometimes I think the CBN were afraid that we are losing control. And they decided to come in and say, let's go back to our vomit, which is the BDCs.
Okay, so we do not have much time, but for you, if you were the CBN governor, would you, and obviously you will not encourage increasing the MPR, what level would you have kept it on?
I think I would look at the businesses and I see how they are struggling. I would have left it where it is. I would have dealt with, I would have increased the cash reserve ratio to deal with that liquidity issues. Then I would concentrate in stabilizing the FX market, knowing that is the major challenge that we are facing. So my whole idea, my whole policy, all of the MPC members, what I will be telling them is come up with a solution on how we can bring down FX.
But why is it really so elusive now? The bid to strengthen the Naira. Okay, there was some encouragement earlier in the week, but even now.
It's supply. And again, supplies is there, then regulators are there. It's not that the CBN cannot decide to pump on FX into the market. Why, I still say it, and I said it before, if you as a CBN came out that the bank have excess liquidity in FX of about $7 billion, and you told them, you gave a memo, came out with a circular that $5 billion of that should be released into the autonomous foreign exchange market, why are you still not engaging them in also having participating in the FX market to bring down the rate since they have so much liquidity? Right. Must they come to the autonomous FX market? Why can't I walk into my bank and go to a section, just like you go to where your cashier, and go to a section and have an BDC section, an FX section, where I do my transaction seamless with whatever document you want me to come with, right. And then you do those changes. That is what is done in every foreign land. Why can't we do it here? Right. It's not rocket science. Okay.
Let's use that as a fine place to leave the conversation. Mukhtar Mohammed, thank you very much for all these explanations and contributions on this very, very topical issue.
Thank you for having me. Thank you.
All right, and that's our 7 for you.